everyone, welcome back to Navalier Market Buzz, episode 46. I'm Crystal Navalier, and I'm joined this week with my father, Louis Navalier, and a very special guest, Adam Johnson, who might look actually familiar to you. Adam was on Bloomberg as an anchor for many years and is now a frequent guest on Fox Business. Thank you so much, Adam, for being here.
Thank you, Crystal, and thank you, Louis.
I'm excited to have Adam on Navalier Market Buzz because his service, Bullseye Brief, is a great resource for all serious investors.
Louis, thank you. I really appreciate that. Home of the American Ingenuity Fund. That's Bullseye Brief.
So, Adam, I find it interesting that you actually got your economics degree from Princeton, but our Fed Chairman, Jerome Powell, got a politics degree. Do you think that our Fed Chairman is political, since he recently said that the Fed would have to cut key interest rates by now if there were no tariffs?
Well, he clearly went to Washington. I went to New York. So I'm true to my economics degree, and I guess he is true to his politics degree. He's trying desperately, Crystal, not to be a politician, but he kind of has to be, because his boss, the president, Donald Trump, is taking a very harsh line against him and effectively saying, you've waited way too long to cut rates. I actually agree, and I'll tell you why. The four indicators that track inflation, CPI, PPI, PCE, and GDP price index. If you average all four of those, you get to 2.4%. The target is 2%, and inflation was as high as 11%. So, I mean, come on, we're practically there. And yeah, I actually agree with the president on this one. We need to cut rates. They're late to the party. And cutting rates, I mean, that's just something that I think we can all understand. First-time home borrowers at a 20-year low because rates are so high. Auto loans are expensive. Home equity loans are expensive if you can get them. Cost of running a business and securing capital is expensive. So a rate cut is like a tax cut for everybody. And given the fact that inflation has come down so much, yeah, I think the Fed is behind the eight ball. Mr. Powell would be astute by not only paying attention to the but also the politics of the whole situation.
So, Adam, the FOMC minutes revealed that there is definitely a rift brewing on the Fed since at least a couple FOMC members want to follow the inflation data and start cutting. So when do you think the Fed will start those cuts?
Well, unfortunately, I don't actually have to have an opinion on that. We can just go to the market, right? Fed fund futures are effectively saying there's going to be a cut in the fall, call it September, and another cut in December. The funny thing is, Louis, I mean, those Fed fund futures have been all over the map over the past 6 to 9 months, but for the past 2 months, they've been pretty steady right there. And I think intuitively that probably makes sense if we don't get a pop in inflation related to tariffs. It hasn't materialized yet. You never know. So stay tuned. That's also, by the way, I think why Jerome Powell has been hesitant to raise rates. Remember, he's trying to protect his legacy, and he doesn't want to be the guy who cut rates and then all of a sudden inflation went up, whether it's for tariffs or any other reason, and he's now got a reverse course. That all of a sudden destroys his legacy. So I think that's what he's actually worried about.
Adam, the Wall Street Journal had an article that said the next Fed chairman is going to be a Kevin. Kevin Hassett, Kevin Warsh. Do you have any idea which Kevin it will be?
Probably one of the two. Kevin Hassett is, I mean, they're very different guys. When Kevin Warsh was on the FOMC board, that was a number of years ago, he was viewed as controversial because he was very conservative, didn't often express his views clearly, was sort of thought of as not being a team player, and yet incredibly smart, very highly respected in the business community. Kevin Hassett, by contrast, I mean, he looks like a kid. He's got the big smile. He's always happy, an eternal optimist, which I respect, being an optimist myself. And so he's kind of the warm, fuzzy version. I think it's going to be one of those two. They're both in the lead. They're both conservative. From what we hear, President Trump likes both of them, but, you know, he liked Elon Musk too for a long time. So, you know, just stay flexible.
Great point. You know, Adam, the big financial stocks are going to be announcing next week, and JP Morgan obviously is going to lead the way. Jamie Dimon nowadays seems to be actually more influential than Fed Chairman Powell.
Yeah.
Do you think he'll be happy for a change? Because he's always kind of on guard a lot.
I know. And it kind of bugs me. but I've just come to accept that's the way Jamie Dimon is. When things are going great, he always says, well, this could be as good as it gets. And then it turns out that no, things actually got better. He said, well, you never know, so you got to be. I think he's kind of protecting his flank, maybe a little bit like Jerome Powell trying to protect his legacy. I think it's easier to sort of say, well, we have to be aware of some of the risks. And if they don't play out, you can say, well, it's all worked out. But if those risks actually do come to the fore, you can say, well, we've been warning about this. So, I kind of get it. I think most responsible CEOs play that script. Ed Bastian at Delta, if you remember, Louis, a few months ago, basically suspended guidance because he said, there is a risk of recession, which I totally disagreed with. He said there is risk of tariffs. Okay, fine, a little bit. And some of their bookings were light. I think that was reflecting the storms of January. So he suspended guidance. Stock got crushed. I know because I own it. And then a few days ago, he said, well, actually, we seem to have the visibility back, and we're reiterating our guidance somewhere between $5 and $6.25 of earnings, and the stock goes up 15%. We didn't need to do the voom and then the voom, but he did that to try to be a reasonable CEO and give people the heads up. Jamie Dimon does this sort of thing all the time. Admittedly, I think that CEOs, and while we're talking about him, Powell as well, give us way too much guidance. I think it's hand-holding. I don't think it's healthy. I wish they were a little more secretive. You don't say I love you on the first date, and I just wish they would kind of hold back a little.
TSM announced strong June sales growth of 26.9%, which was better than analyst estimates. But what do you expect for TSM's Q2 results?
Well, that's a great question. Forecasted to post 36.7% sales growth and 53.9% earnings growth. The analyst community has been revising their earnings estimates higher. So I'm expecting TSM to surprise, and this is an important bellwether because, of course, they make the NVIDIA chips.
Yeah, Louis, I'm long a ton of these semiconductor stocks. In fact, the second largest theme in my portfolio, about 24%, is computing power. So, you just talk about Taiwan Semi. I don't own Taiwan Semi, but take your pick. NVIDIA, the big one that I think you have to own, that's Core Ingenuity. XP Semi, the largest for automotive chips. Marvell Technologies, which is part of the whole AI ecosystem. They focus on the power behind databases. For that matter, monolithic power, which helps regulate the power running through these AI systems. Celestica CLS, which assembles the systems. It's just such a powerful theme. And you just talked about Taiwan Semi, and we could talk ad nauseum, probably the three of us, about NVIDIA and what they're doing that's so different. They're faster chips, obviously, and they consume less electricity. It's just, computing power is such an incredibly powerful theme for this year, made more so by AI.
Well, that's why you're a great stock picker, because let's face it, this is really not a sector market this year. But there is one little subsector called semiconductors. They're definitely leading the way. So you have.
And I think you and I both have a few things to say about Supermicro Computer, and it's finally coming back after that crazy downdraft.
Yeah, I never sold it. I'm still up about 900% in it, and NVIDIA were up like 3,600%. So, they have to go higher because I own them.
So what do you expect for ASML?
Well, that's the lithography company to build the high-end chips, and they're in the Netherlands. They're forecasted to post 21.1% sales growth and 30.7% earnings growth. There have been some analyst estimate trims, but ASML does have a good earnings to price history. It has been lagging in the semiconductor area, but it is a bellwether. So we want them to do well. And so let's hope they surprise. The Trump tariff deadline of July 9th has been extended to August 1st. And Vietnam was set at 20%, but with a 40% tariff on all Chinese goods sub-assembled in Vietnam. Japan and South Korea tariffs have been set at 25%, effective August 1st. So clearly Trump wants them to onshore more due to all their existing U.S. manufacturing plants. However, the most shocking news on the tariff front was Trump hiked the 10% tariffs on Brazil to 50% effective August 1st if Lula da Silva, the president, continues to prosecute former President Bolsonaro. Adam, clearly President Trump is using tariffs to conduct foreign policy. Do you have any opinion on what might be the ultimate outcome for Brazil?
Brazil is an impossible one to gauge, in part because uh, the greatest economists in the world can't figure Brazil out. English bankers have been trying to figure out Brazil, Spanish bankers for that matter too, for the past 300 years. It's such a volatile place. But, Louis, I think it's important for all of our viewers to understand that all these trade headlines, tariff headlines, I mean, they come and go and they change, every 36 hours, there's a variation. I mean, even TikTok, right? That deadline's been pushed back 3 times. So I don't think anyone should look at a particular headline. Brazil 50%, South Korea and Japan 25. I don't think anyone should necessarily look at those headlines and say, "Yep, done deal. That's it." I think this is all about negotiating, and President Trump is turning the screws on partners and putting some pretty scary stuff out there to get them to come to the table and actually make, as he would say, some sort of deal. And I think the market, by the way, has figured that out too. I mean, think of the downdraft back in April when this whole thing, Liberation Day was first announced. I mean, it was pretty scary. Some of my names were down 35% in a couple of weeks. They've all come back. And then, recently we talk about Brazil on the same day that Mr. Trump said 50% tariffs on Brazil. Stocks went to a new high, and the VIX, the volatility index, the fear index, went to a 6-month low. So, I think the market has gotten over this. I think we've all come to see it for the sausage making that it is, for the hardline negotiating that it is. And so I don't admittedly take any of this stuff as the end all be all.
I would add that you brought up TikTok. I think one of the reasons Trump has to get that deal to go through is, his little dance is on TikTok. Okay. So he won't be able to promote his dance unless they get the TikTok deals.
Yeah, I guess they've copyrighted the dance. It's now a TikTok. I don't know. It's funny. Yeah. No, again, I'll believe all this stuff when I see it. When we finally actually get legit stuff written down and it happens, I'll believe it. Until then, it's all a negotiation.
Adam, private credit is overpowering Wall Street and is now a $3 trillion per year industry. Do you think that the leveraged loans behind private credit could eventually trigger a new black swan event?
Yeah, it's a thoughtful question, Louis, and the answer is yes, it's possible. 3 trillion, just to put that in perspective, is about 1/10 of the size of U.S. GDP, the entire economy, and that tenth is obviously all levered money, and it's not something we can really quantify because it's like an off-balance sheet item. It's not reported, it's not tracked. The Fed can estimate it. We don't know what the loan quality is. We don't know what the covenants are of these loans. It's not standard stuff. So it's a black box. If you ask me whether it keeps me from investing in stocks now, the answer is no. I mean, I'm not sitting on the sidelines because of this potential thing that's out there, but I will agree that yes, it is a potential thing that's out there that we can't quantify, and that thing could maybe be a black swan one day.
Great point.
So, Adam, your recent report that was titled More Power, More Capacity to Enable AI is truly outstanding. What are your favorite stocks helping to expand our power grid and data centers?
Oh, my favorite is GE Vernova. Ticker is a GEV. This was a spin out from the old General Electric. And I tell you what's really cool about this company. They basically took a jet engine, that is something GE has been building for decades. And instead of mounting the jet engine on a wing, they basically mount it on steel brackets outside a factory. And instead of running jet fuel through it, they run natural gas through it that can come in from a pipeline feed, or if you happen to have natural gas on your own property. And they use the natural gas to spin the turbine that ultimately generates electricity. So you can generate electricity on site. Guess what? Problem solved for all of the data centers. So GE Vernova has just taken off, as you'd expect. I think it's going to go a lot higher from here. And this is the data center solution. So that's very exciting. Sterling Infrastructure, STRL is that ticker. This is a company that used to do all kinds of big infrastructure projects, from utility build outs to even highways, tunnels, et cetera. And along came the data center, and they realized, oh, we can lever our expertise in electricity by building data centers. So Sterling now gets, oh, I would say almost 60% of its revenues from building data centers. And we are building them hand over fist. So that stock, like GE Vernova, has gone up a lot. I think it's going to continue to go up. I own them both. I've been adding to them both. So that's my data center. I hate to say play because that sounds sort of careless or cavalier, but those are my data center focused stocks.
That's wonderful. Adam, you also have written that Tesla's humanoid robots are coming. Uh, when do you think the Optimus robots will be rolled out in the upcoming years?
Oh, this year, Louis. It's really amazing. And so Tesla, I've never owned it, and I've never wanted to own it because I thought, why would I pay 80 times earnings for a car company when I can buy Ford for 6 times earnings, right? Except that Tesla is not going to be a car company indefinitely. I think if you just run the numbers, ultimately the robots will produce far more revenue and certainly profits than the cars. So Elon Musk has already started building these humanoid robots. I mean, they actually, look like C-3PO from Star Wars, and no joke. And he's building probably 10,000 this year. He plans to have all 10,000 deployed across his factories by year end. And then next year, he's going to start pivoting into commercial production for third parties, other people, other companies, et cetera. And he thinks that by 2027 or certainly 2028, his run rate will be a million a year. Well, he's going to price them, he says, at $40,000, and he said his margins will be 100%. So if you take that for face value, 20,000 robots, and even if he just does, half a million, all of a sudden we're talking about tens of billions in revenue. And that will actually be more than he generates from selling cars right now. So that's why I say I think Tesla is going to, over the next 3 to 4 years, go from being an EV company into a robotics company. But what's really cool, Louis, is that they're training all the brains of the robots based upon all the information gleaned from the cars in terms of how people or cars interact with one another, or cars interact with other trucks, or how people respond when they drive. Or, the Tesla car tracks your eyeball. So they've learned so much about human behavior and game theory that they're incorporating into the brain of Optimus, this humanoid robot, that I don't think there's going to be anything else on the market like it. So that's why I finally bought Tesla. It's not because of the cars, it's because of Optimus, the humanoid robot.
So, Adam, since you're a media expert, it appears that the media is increasingly striving to get hits on Google Analytics with, more shocking news.
Yeah.
In your opinion, is the traditional finance media becoming more sensationalized?
Yeah, I think they have to become more sensationalized just to capture people's attention. I mean, think about the three of us. We're having this conversation right now in different locations, and it's all going to get uploaded, put on to the web, and there are going to be probably tens of thousands, maybe hundreds of thousands of people watching it over the next several weeks. And guess what? That means that the three of us, plus everyone else, we're all competitors against traditional media. It used to be that if you wanted to watch something like this, you had to turn on Bloomberg Television or Charlie Rose, or go to CNBC, or who knows where, interesting people come together and talk. Well, now it happens on YouTube and Twitter and so many different places. So yeah, I think you're right, Crystal, that traditional media is having to try to become more sensational in their headlines to grab our attention. So we say, oh my gosh. I mean, my pet peeve is when all these producers use verbs like skyrocketed, say, pick a stock, XYZ stock skyrockets. And then you go to your Bloomberg and you go, yeah, it's up 5%. Give me a break. But because they said skyrocket and they didn't tell you how much, now, you click, it's clickbait. So yeah, I'm very aware of that. And in fact, sometimes I purposely don't click on stuff just because I think it looks like clickbait and I don't want to give someone the credit of my click.
Well, Adam, where can all of our viewers find you?
Oh, bullseyebrief.com. I publish my Bullseye Brief newsletter every Sunday morning at 7 a.m. And it's the home of the American Ingenuity Fund, Bullseye Brief. I run a portfolio of about 40 names. They are the people, companies, and technologies driving our world forward. And every week I highlight a different pick in the portfolio or a new one that I'm adding. I talk about news on our names, catalysts on our names, and of course, trades that I'm making in the portfolio. And I try to make it easy for people. And so people can find me at bullseyebrief.com.
Perfect. Well, thank you so much to you both for answering all my questions. Thank you so much, Adam, for joining us this week. Thank you to you all for watching and supporting us. Make sure to hit the like button and subscribe if you haven't already. Any links that we mentioned in the video will be in the description below. But until then, we will see you all next Sunday for a new video. Thanks so much, everyone.